I hope you guys are having a wonderful weekend. I'm gonna be starting to do update nows on Monday, Tuesday, Wednesdays, Thursdays, and Fridays. Basically, all of the trading days, because we're starting to see a lot of people coming to watch the videos, and things are starting to pick up a bit. So that's quite nice to see, and actually a good amount of subscribers. It's getting more and more every day. So let's just do some overnight analysis because the futures are open. We have some new signals on the weekly time frames and the new daily time frames as well. And we have new candles all over. So let's just take a look here and see what we got going. All right. So right now, just starting off with the S&P 500, we could look at our bullish count first. So right now, obviously, the market has had an incredible move up towards the upside. It's gone up essentially on the S&P, at least it's gone up over 7 to 8% essentially in a week and a half, and the triple Qs have gone up even more, 10%, 10.5% in less than, let me just take a look here, from the lows to the highs. How many trading days was that? 15 days or 11 bars. So 11 bars is essentially 11 trading days, because this one is counting like weekends and stuff, and so it's skipping a lot of days. But in 11 trading days, you were able to rally 10%. So basically almost a percent every single day, which is, it's something. It's something to see. And right now, we've broken past this downsloping trend line on the triple Qs. On the SPY, we are at resistance at the moment. The Dow Jones it's got that nice bounce from where I had that nice pivot point at. We actually broke through it and then reversed the next day. The Dow Jones right now is probably in tremendous resistance, I would say, taking from all these previous pivots. So again, it's something to watch and to pay attention to. And the IWM is probably the worst one out of them all. I got a lot of trend lines here, but the most important one probably be this one right here, that I would say at the moment we just bounced off of. I'll just mark it as maybe a different color, make it a little bit thicker, and I'll make it yellow for the time being. So as you guys can probably tell, we had some previous pivots, all right, and we've broken down from it. We retested as resistance, we came down, retested massive support, and we actually broke it and made a new low. So we took out the October lows on the IWM, and then we had an 8% rally in 3 days. And then for after that 8% rally, it's been nonstop selling in the IWM. So again, something important to note is that if you are bullish the stock market, you always want to be bullish the IWM, because that is where speculative money goes and where growth comes from, right? It's when speculative money gambles in the market and pushes it higher. What we have going on right now is the mega cap 7, or the mag 7, who are dragging the Nasdaq up and the S&P. So it's kind of just, I would say it's saving the market at the moment. It's just holding everything up, while the IWM is just struggling every single day. It just can't get out of its own way. And once we took out these lows here, that kind of triggered a lot of algos to start to look for shorts on the IWM. There's a lot of weakness there, and they're jumping on it right now. So it's a really dangerous time to be long the IWM, I would say, especially right now. So let's just get back to the bullish count. And the bullish count right now, it's still possible, and it's still possible for the bearish count as well. And we're going to go over it at the moment. So right now we've come up in 5 waves that I can see here. You got your 1, 2, and then your 3, which is a massive extended 3, which is usually the pump waves or the crash waves. And right now you're coming back in a 4, and now you should be finishing the 5th wave, given how extended the market is already. But it can keep going. Don't get me wrong, this thing, it can just keep going, right? It's just been pumping nonstop for the last 11 days. It could very well keep going, but at the moment we're starting to see institutions take profit on the dark pool trades. So they're starting to exit this, and I don't think they want to get in front of this anymore, or they want to get out. This last pump that we saw, maybe it was the exit money to stop out all the short positions that are getting short, and maybe the shorts are flipping long, because we're technically breaking out from another trend line that they have. But this is the one I'm looking at. Now we're going to be coming to the CPI week and the PPI week. If the PPI is bad or something, or we got bad economic news, or it just comes in line, or let's just say the markets pull back regardless, right? And we start to come back down in an A wave, then that would be the beginning of either a wave 1 or an A wave, right? And then we come back in a B, and then finish in a C, and then you'd have to have only 3 waves down for this to stay bullish. Because if you get anything more than 3 waves, you're starting a 5 wave move down, which is going to be the bearish scenario, right? Which is going to be the beginning of a wave 1, which would lead to the wave 2 correction, and then finally a 3 of 3, right? A wave 3 of the larger wave 3. And this would be extremely bearish, right? Because this is the bearish count right now. It's a wave 1, and you can clearly count 5 waves down. You can't make this 3 waves, no matter how you want to cut it or shape it, which is what I have it labeled here for now, which is 3 waves, 1, 2, and a 3, which is really pushing it. But you could also make 5 waves here, but right now it's a clear cut 5 wave, 1, 2, 3, 4, 5. But I have it as a 1, 2, 3, 4, 5 here of a C wave, which is the bullish scenario, right? And we're gonna respect it for now. And so that's essentially it. The bulls need to hold these levels. I would say they would have to stop it at the gap fills here, and then just keep pumping into a wave 3, and then just rally into year end, right? And just nonstop pump basically into the 500 area, or like the 4, maybe the 480s back to all-time highs, and then pull back maybe in January, and then keep going into February. And it's just melt up, right? Because and you got a lot of things going on for the bulls. Don't get me wrong. You got seasonality, right? You got buyback programs and mega cap tech stocks, which is obviously helping the market too. It's a lot of buying. And then you have a lot of people that are just pumping this on Twitter. And CNBC, right? I watch CNBC and Bloomberg, and I can tell you it's just nonstop bull city over there. They're just very bullish all the time. And usually when they get bearish, it's at the lows. And right now they're extremely bullish about seasonality. So again, that's the bull case. But I have my doubts about this entire rally. Impulsive moves like this, massive, very short-term rallies, tend to be bear market rallies. And this is where the bearish scenario comes into play, right? You have so many fundamental things going wrong in the economy. Again, those are long-term things, but they've been going on for a while now. And then, when everyone starts to get on one side of the trade, and the other side of the trade starts to make fun of of the people who are losing money, who are short or are not in the market, then that usually leans to a side of a top. And I've been watching Twitter this weekend, and we have a lot of gaps here, right? We got a lot of gaps at the lows. But the thing is that the bulls now are not looking at these gaps. They say we're melting up, so you should only be looking at the gaps on top, which we do have gaps on top. We have a gap here on the SPY. We got another gap here at 45.77, right? So they're only looking at these gaps, and they're saying gaps down don't matter. So they're very biased on their analysis, and that's why it's wrong. You got to take a look at both, both sides of the trade. So right now, I'm looking for a pullback week down to potentially, at the 43.15s to the 42.40s. Obviously, it didn't happen last week. It was a melt-up week. And now, we'll see if we start the beginning of a 5-wave down, right? Well, we messed that one up. A 5-wave down. And if it is 5 waves, then you should be on crash alert. Because then you're going to bounce back. You're going to get a corrective wave bounce. Or maybe you won't, right? I don't know. Maybe the wave 1 extends further and you take out the lows, right? And then you get another bigger bounce, and you start to go, come back up again, right? And you just destroy traders, and then you start to come back down, and you wave 3 of 3. But again, it's just you gotta be careful. This is the time to be cautious, not to go over leverage yourself long to the hills. And again, the C wave that I have marked as finished right here, it could extend up, right? It could keep going up, and it could be part of a bigger expanded flat or something like that, right? The wave 2 can expand upwards like this, right? You could do something like that, right? That's why I said it's, this trend line can break. Just because I have it marked as resistance now doesn't mean it's going to hold, right? Things can break out, and then the shorts get obliterated. Everyone in the bull side gets even more bullish, right? And then you start to capitulate. We'll take a look at market cipher in just a moment, and we'll take a look at the weekly time frame because we printed a new weekly candle. All right, so right now the S&P 500. We'll start off with the S&P. A new weekly candle, a -5 and a 16. Very, very bullish, right? Green money flow, green dot confirmation of a low last week. It looks like we should rally into year end looking at the weekly. When we look at the larger time frames, the monthly, it is showing a potential top in the market already, and we should start to keep moving down. So it's showing that bears are in control right now on the larger time scale, and this could very well be a bear market rally, right? And then the daily time frame, you take a look here. It's still looking good. But your red money flow, but the momentum waves are moving up, and so is the RSIs are climbing back up. Looking at the smaller time frames, maybe the 4 hour, you got another tight green dot showing that we could potentially extend up higher. The futures are down at the moment. They're down like, wow, almost like, actually this is the futures. This is Owenda. The futures down actually 50 basis points on the Russell, 30 basis points on the S&P, and 30 on the Nasdaq. But we'll have to see, because overnight, maybe you might get selling and then it just pumps at the open. And then on the 1 hour, you have a little bit of a tight red dot right now, so maybe that's probably why we're starting to see some selling. But we'll have to see if it confirms and it becomes a smaller ABC, and you start to head down in your wave 1 or something like that. Okay, so that's essentially it for the S&P. Let's take a look here at the Nasdaq. So Nasdaq is even more bullish. Same thing, increasing green money flow, green dot, -5 and a 16 on the dual band strength index. Monthly time frame. Again, the monthly candle is flipping green on the Heiken SG candles, but it's still showing a red dot at the moment. It hasn't confirmed, so because it didn't confirm last month. But the Nasdaq is not the one I'm going to be looking at, right, for a leading indicator, because this one is very biased, and it's very easily manipulated and swayed by the Mag 7. What I like to look at right now is, daily time frame still very bullish on the Nasdaq, and we're actually showing a potential fifth wave extension here, which could mean that the Nasdaq may go even higher, right? With the Mag 7 just pushing and nonstop pumping, another 10%. It's showing that at 1.618 extension. But let me get back to the Russell 2000, because this is Russell 2000 is historically known as the leading indicator. But all I see on Twitter and people who talk on the news is that it doesn't matter. The Russell does not matter when you look at the market. They don't matter. So they're very biased when they're doing their analysis. You have to look at actual facts, and the Russell is a leading indicator of where the market is going. Right now, the Russell has broken its October lows. It's gotten a very nice relief rally. We've gone up 8% in 3 days, and now it's starting to pull back and it's starting to fall apart again, right? The monthly time frame is showing a 23 and a -5 on the dual band strength index. Extremely, extremely bearish, right? You have decreasing green money flow. Weekly time frame, you got a nice green dot here and a nice bounce as well, right? But you're still in the red money flow. And now if this weekly candle is already showing not to be as bullish as the previous one, you have a 13 and a -3 and a -4 and an 11, right? We should keep moving towards the upside. But if it doesn't and it starts to roll over again and it falls apart, I have a very hard time. We'll cover the daily. We'll have the daily time frame 14 and the -3, and now you have an 8 and a 0. You have a very tight momentum wave, a red dot, and red money flow, increasing towards the downside, right? So I have a hard time seeing, the Russell 2000 breaking down and just taking out its October lows and just completely, falling apart within like even a waterfall sell-off. And the SPY and the Q is going to all-time highs. I just don't see that happening. I just cannot. I don't understand the melt up scenario, why bulls think this will happen when you don't look at the IWM as well, right? So that's just an interesting piece of information that I think you guys should take into consideration when you're getting into some very, heavy longs. It's time to long everything. Right now you have a 25 and a -5 on the 4 hour, but we're not seeing any pumping happening, right? If anything, we're seeing selling down 50 basis points. But it's just pre-market overnight trading. 1 hour red dot, C wave can extend down. So these are just smaller time frames, but I like to focus on the bigger picture. Okay. So that's what I see right now on the Russell 2000. Okay. Let me just take a look here. We'll take a look at wave edge. We could cover the Dow Jones very quickly, but the Dow Jones is essentially the same thing. You're rallying up with the S&P and the Nasdaq, and again, the Dow Jones is just price cap weighted, right? So the Dow Jones is probably not always the indicator that you want to take a look at when you're looking for tops and bottoms. All right, let me just move on. We'll finish it off with the wave edge, and maybe we'll take a look at the dollar. Actually, we'll take a look at the dollar right now since we're on Market Cipher. So the dollar was actually holding up quite well. Even with this massive breakdown, it came back up and it recaptured these levels here, right around 105.6. I know when we broke down, everyone was like, that's it. It's the dollar is going to melt down and the indices are going to melt up. And this is it. This is the melt up we've been waiting for. But when I take a look at the dollar on the monthly, it's still looking bullish, although less bullish right now on the with a -4 and an 11. The weekly time frame was looking extremely bearish, and it kind of is still looking bearish as well. You have a 20 and a -5 and a 13 and a -4. You actually have increasing red money flow, but it doesn't mean that you can't pump back up in the dollar, right? Taking a look at the daily, you actually have a green dot confirmation of a low. You did have one here as well, but you're kind of choppy. You're in this choppy range, and then you had another pump attempt, but it failed and you went lower. Now you have a green dot. You still got green money flow, so we'll have to see if the dollar is going to get another leg higher, which would be extremely bearish the equities. But if it falls apart and it keeps going lower, then you can make the case for the melt up in the S&P. All right, let me take a look here at. We'll finish it off with wave edge. So wave edge. Excuse me, this is a little bit of a burp. I've been talking and a lot, and I had dinner. So right now the SPY, we're getting a lot of whales unloading at the highs here. I can pull up volume leaders very quickly here in front of me. We had the XOSL being unloaded, the triple Qs, I think and then another one, which is QLD, which is double leverage, the Nasdaq being sold at the highs near the end of the day on the S&P. And don't forget that we still had that phantom print right around 358 on the triple Qs. And it's always funny to see on Twitter again. Those prints don't matter when it's against my bias, right? I look at both. I haven't seen any bullish phantom prints or anything on the triple Qs to the upside, but I have seen one recently on the downside. And we saw one actually on the SOXL, I believe. Let me just double check here very quickly. I'll tell you guys right now, live, as I'm recording my video, where this phantom print was. Let me just take a look here. Oh, it was a VONG, VONG. So let's just type in VONG. Vanguard Russell 1000 Growth ETF. We actually had a phantom print right around, let me take a look here, at the $69.59 level when we were at 67 or something like that. So right around this area, 69.50, right? We had a phantom print and we were down here, right? 68 something or 67, so even lower, right? 67. Okay, so we got that phantom print up here, right? And then the Russell melted up, right? And we filled that phantom print. That phantom print came in clutch, and we printed up, and everyone was talking about, oh my God, this is so bullish for the phantom print. It's bullish. Keep pumping. But most people are always going to be bullish because nobody wants things to go down. Everybody wants to own a company, own a stock, and I get that. But right now, You can't just be biased and just think that's it. I don't want stocks to go down, so I'm not going to listen to any bearish analysis. You got to listen to both sides of the trade, and if we do end up keep moving up, then you'll be just wanting to wait for a pullback, and then you'll buy into it, and then you can enter a safe trade. Because buying here at the highs, in my opinion, is extremely risky, right? It's like FOMOing, and that's exactly what the institutions want you to do. Just take a look how much the XOXL is up in only 11 trading days. It's up over 47%, right? So that kind of tells you what the institutions are trying to do. Look at all this selling on the XOXL. Like they're just unloading it as people FOMO into it. Okay, all right. Let me finish up here with properly on the wave edge before I get sidetracked again. The 1 hour, again, the 1 hour, lots of selling. We did get a green cross and then melt up once again. And we'll have to see if that resistance holds. And if we get more selling, or if they're done selling actually, and it just starts to implode on itself and this low is taken out. The first sign that the top might be in is if we take out a 434, we get a daily close here, down here, or even if we fill this gap at 430, which again, no one is really expecting. Everyone is extremely bullish right now. There's no bearish analysis. It's like bulls are dead, rip it higher, right? So you got to be careful. Looking at the diamonds as well, same thing. QQQ, same thing. And again, I need to tell you the DIA IWM. We did actually see some buying here at this pivot low, right? Which again, I have another scenario prepared. If the IWM wants to make a higher high, right, and we want to keep pumping higher for the IWM, this could be an ABC, right? So something like this. Let me just draw it out for you guys. So it could very well be an A, and B, and a C, right? And you can extend higher, right? But if it's already done, and this is you're already going to get into a 3 of 3, which is your meltdown wave. It's going to be something like this, right? And your 2 is done, and you're gonna come down in 3. And this is going to be part of a larger pattern here. So you got a 1, 2, 3, 4, and a 5. Again, I'll just make this not a primary but a minor. This one is also a minor, right? That's a minor count. And oh, that one's a little, that one would be, this one would be finished here, something like that. And then you are going to go in something like this, a 1, 2, 1, 2, and then a 3 of 3, and a 4 and a 5. And this would be your primary count here. Again, I'm doing this very quickly, so I'm probably making some mistakes, but it's essentially that should be your count. I know I have a little bit of some overlapping waves here. Maybe this is incorrectly drawn. I gotta adjust a few things. Maybe it finished here and I just miscounted it, and this is just like an ABC or an expanded flat or overshooting B wave or something like that. But you guys kind of get the picture. It should do something like this, and once we do start to come down, it's gonna be pretty dramatic. Like no one's really expecting anything like this. Everyone's very bullish, and everything is fine. Seasonality, seasonality, seasonality. That's all I'm hearing, right? I don't hear anything bad. And I mean, well, it's gonna be interesting to see if the yields go higher, which they're already up, based on not the Fitch, Moody's negative outlook. Moody's is actually the only one that still hasn't downgraded the U.S. debt. They're the ones that still rating it AAA. If they do downgrade it, maybe that's the catalyst that the market needs to go lower, or maybe it'll go higher. I don't know. But overall, when I look at the indicators, the S&P, the Nasdaq, and the Dow Jones all look extremely bullish. But speculative money, where growth is comes from right now, where people put in their money to be risk on, it's just not there. It's just not there. I don't see it. Anyways, hopefully you guys got something out of this video and you enjoyed it. Maybe you hated it. I don't really know. You guys can follow me on Twitter too. I give you guys some updates there. Have a good rest of your weekend or rest of your night, and I'll see you guys tomorrow when trading opens. Peace.